Welcome to the weekly chart review. It is Saturday, September 17th. I'm going to jump into NASDAQ and stocks. And judging by what we've seen this week, it was it was intense. We had a very deep drop that started around here. Like I was expecting that. Strictly because of this very recent watch. So if I draw a Fibonacci from this original peak where I saw the drop happening all the way to the bottom, which was right there, okay, it hit the 50%. Now, where it's sitting at right there is exactly in this specific area. Okay, so I will delete that Fibonacci and just give you an example as to where it was actually from. All right, so that's the original peak, and this is from, at this particular point, this was from the first retracement. Okay, so if we go from the high, this just made the 50% and dropped, and it hit off that 618 EMA. Exactly, right? You can see those 4-hour candles that hit off there. But if I go on the daily, all right, off the daily, it doesn't really do much for EMAs, but you just get a better idea as far as the depth of the market that moved here, right? So off the 618 from this pullback, it was actually quite deeper, but I'm not too concerned about that specific part, right? When I look at this one, this is just my chart to see where the gaps actually are. And as you can see, when we had that EMA shift right here on the 23rd of August, we had the big engulfing candle, slow pullback for the entire week, never actually crossed again, and another engulfing candle. So what I believe is going to happen is this is going to actually continue to drop to about 11,260 to close off this gap. Then we'll have a retracement. Okay, so what I see happening is this. From the top, this gap is going to be the bottom around there, and pullback is going to be in this general area. Okay, so currently what's happening is this gap is left open. That's the 618 retracement as far as this entire move goes. And very likely it's going to pull up maybe in the middle of this, just because this is a very large imbalance that was formed. Majority of this entire candle is actually on a 5-minute time frame. I watched it happen live. It was intense. I saw my position increase 400 pips within 5 minutes, and I thought that was incredible. I've never seen a move like that happen that I'm actually in the positive trade. Right? Typically, it takes a lot longer for that to occur, but it was pretty good to see. I think overall that day it was about an 800 pip day, so it worked out in my favor pretty well. Anyway, so what I predict is going to happen is, whatever kind of silliness is going to go on here, we're going to come back down to there, slowly pull back up, and then deeper we go. Okay? Until we finally hit this mark, that 10,000. Now you see that was an original gap that formed way back here. 1st of July in 2020. Okay, very, very long time ago. Ultimately, I do believe that it's a very good chance we might actually close even this one in the long term. That was formed on May 15th of 2020, just when COVID was, we were finally from that shutdown and it started to pull up. There's a possibility we'll hit that far. I think we'll just hit this area because it is previous resistance zone, so it will be used as a support. As you can see, it kind of did that the first time way back in June of 2020, and we've never seen those numbers since. So my overall prediction for now is in the long term we're going to be going to about 9,700. and that is off the ON chart, I believe. Yes. So the IXIC will be about 550 points lower than that, so about 9,300, 9,200, about there. So yeah, it's going to be a very, very deep and slow, painful drop. Okay, I'll just move back to where we currently are. Okay, so that is current prediction. Let's just draw some arrows to see where that's going to happen. I don't think, just somewhere around there and then somewhere around here, right? Like that's kind of what I'm expecting to occur. And I'll just delete this. We don't want to have a messy chart. So yeah, this is what I can currently see at this point. Decent retracement, you know, when we have our Elliott waves drawn up in the past. As you can see, the gap to close is going to be right there. The reason I don't think we're going to go lower the first time around is because of this ultimate low here that we had. I think it's going to be a retracement first before it goes deeper, right? Similar to what we've seen here, it closed the gap, pulled up, wavered around for about a week and a half, and then dropped lower. Okay, that is what I think is going to happen in the long term. If we look at this chart, right, this move was very smooth. It just bounced off that purple fib channel line. And the purple is a unique number. What I have here, I'll just quickly show you. I don't need this one. So fib EMA, style. No, that's the wrong one. Sorry, I have to right click on this guy because this is not an indicator. This is a tool. All right, purple line is 1.414. So it's the only one that has a unique color to itself. Right, as you can see, my whole numbers are all teal or aqua, whatever you want to call that. The Fibonacci most common numbers, the 618, 786, 0.5, 1618, they're all yellow. Okay. So after the yellow, the most common one to see is actually the purple. And that's why it's a unique number on itself. Like it is a Fibonacci number as far as a percentage goes. However, it is not as common as the golden lines, but still second most after those. Okay? And then from that point on, I have the reds and then the greens and then the black, which rarely gets triggered. But anyway, that is what my lines signify. So what ended up happening here, and the reason I predicted that this was going to be bounced off there, you can feel free to watch last week's review because I was saying that this is going to happen there. Even as it was dropping, we're going to have a pullback. So even 2 weeks ago, this is what I was saying. Okay. Reason being is because there was a lot of volume buildup here the first time. That's the second time, actually. So what happened here? Okay. Crossed down, rejected, rejected, and then finally broke through but consolidated around that purple line, and then again rejected, broke through, and as soon as I saw that breakthrough without any rejections the day after or the day before, I'm like, it's going to pull back up to this area and then drop. And sure enough, it's exactly what happened. All right. So there is that. I'm going to delete all of these boxes. It was great that it happened. You know, I have it recorded to prove that I'm not crazy. I know what I'm talking about. Anyway, so overall, as you can see, that rejection that happened there. If we take the fib from this peak all the way to the low originally that we had, you can see it's just past that 618 like we saw when I did it on my highly marked up chart, and passed a little higher. This is what kind of threw me off the first time. I thought the rejection was going to happen right there. I didn't realize, you know, that wick would have crossed an extra 80 points, 70 points. Okay, doesn't really matter. It was still around that area. Very good call. So when I saw 618 plus that fib channel line and the EMA kind of correlating in the same spot, this was kind of the ultimate spot of reversal. So grabbed it as it was starting to drop. And the unfortunate thing is, again, you saw the prediction here. You saw 2 weeks out. The catalyst for this was news that was released on September 13th. And the news was CPI data. Okay, regardless if it was positive or negative, that was going to be the catalyst. And now watch what happens. So this is on the 4-hour time frame, okay? I'll get rid of the box. We already know what's going on here. And I'll just highlight this specific candle. Okay, now we'll take that to the 30-minute. Okay, sure, it looks like a 30-minute candle. Watch this, 5-minute. Okay, look at this gigantic candle right there. Okay, I'll delete this just to make it a little more clear. Delete that box. That's the size of that candle in 5 minutes. All right, so it went up first 44 pips, and then it dropped 380 pips, ultimately closing at negative 328 within 5 minutes. Now, you think that's what happened within 5 minutes? Check this out. 1 minute. In 1 minute, up 46, what was it, 44 pips, down 278 pips in 1 minute. Okay, in order to move the market this much, you need to control the market. There is no other explanation. Retail traders cannot move the market this much, not even hedge funds. This move was planned, and it happened the minute the data came out. Okay, 1 minute time frame. All right, 1 minute time frame, 6:30. You can see my timestamp right there on the bottom of the screen, 6:30. The minute the data came out, this dropped 278 pips. Including that, it dropped over 300 pips if we're talking from all that exact peak. Okay, 1 minute, that's all it took. 1 minute, and in 2 minutes, it dropped 334. In 3 minutes, 374, I believe it is, 373. 1 minute, guys, over 300 pips. Okay, I want to make that clear. When you think that the news is what causes these moves, that's not true. The news is just the catalyst. These moves cannot be done unless there is some sort of catalyst, okay? Because it actually is illegal. You can't just make these moves at random. They have to be made on a day where something significant like CPI data comes out, or PPI, or Fed Chair Powell speaks, right? Any of those things are catalysts, and this is what can happen in them. So there you are. Okay, we'll switch it back to the 4-hour just to continue on with this analysis. So like you see what I did here before, right? This is my first place that I think we're gonna go to. Finally, the ultimate drop is gonna be around that 9,700 mark, right? What I showed before. So around this area, and I will do one of these. Pop, somewhere around there. Not gonna say it's that specific day. Oh, November, definitely not. I would say we'll bottom out. Where are we gonna bottom out? I believe it's gonna be January. Yeah, somewhere around there. We're gonna bottom out once the earnings reports are gonna come in from Christmas time, so maybe February-ish. Ultimately, yes, I would say around there. But maybe before that, we're gonna bottom out end of October, mid-November. Around that time, have a pullback once again, and then drop. Oh shoot, did I just move all my lines? Uh-oh. What happened? It's okay. I remember where this purple line was right there. Okay. Just to make sure. I don't want to mess around my stuff. So there we go. Purple line. We had rejections, right? Just want to make sure it's the same zones. A little lower, I think. Better on the daily. I made a boo-boo. What was I thinking? Sorry guys, bear with me. I'll do this in a quick second. So here we go. It was around there. Yep, because that rejected, that was kind of on the line. Okay, so great. All right, so overall, that is what I predict is going to happen. Let's jump on the Dow. It's been a while since I analyzed that. US 30, okay. Oh my goodness. Same area, right? Like I said, I predicted that to happen over a week ago. The exact move happened right there. So wonderful. Played out exactly as predicted, and lower we went. Okay, so now this is going to be the new retracement area. So judging by what's going to be happening, I believe it's going to be dropping to that golden line. You can see where it bounced off the first time, and the liquid EMA, the 987, is following on the daily. So let's see. There's potential for it to go down another 700 points. That's not too crazy from today's close. And from that point on, we'll hit that area, retrace around this, where you saw that big candle form, maybe back to that aqua, and then down we go. Okay, so I believe our next retracement zone will be here. And as you can see, aqua line, Fibonacci, and then the 618 EMA will be crossing that same area. As you just noticed, NASDAQ played out exactly like that. Chances of this doing the same thing are very high. Okay, and again, to bottom out there, that is the prediction. So I'll just leave it up. It'll be fun to see it actually play out. How did Bitcoin do? Damn, Bitcoin's doing pretty good. Nice profit margin, man. That would have been a snipe if that was the entry, right? Unfortunately, I kept it all the way to the 786. So we'll play that nice and fair. So currently, it's sitting at 2,700 points in profit, or pips, whatever you want to call it, on Bitcoin. Quite chunky, you know, very nice move. Quite the snipe. Okay, so let's go over stocks. Stocks? Yeah, we'll do stocks. We'll call this one. You know, I started off with NASDAQ only to be fair. Okay, so Apple. I'm not going to draw any marks on here. I'm just going to go through a couple of the major ones. So as you can see, rejection originally off this one, and then it gapped lower and started climbing for the day. So this green line is pretty significant. Oh, excuse me. AMC, not really interested. You know, meme stocks are kind of over and done with for now. Let's see, Amgen, Amazon. Where did Amazon play out on the daily? You know, as we said before, on August 16th, that was quite obvious. So now it gapped down, kind of closed a little higher than what it opened, but still not fantastic. Where are we headed to next? Around this area, 111. Activision starting to finally drop. It was consolidating for a very long time. We're seeing the lows starting to be made. Best Buy, what's Best Buy doing? Let's see. We talked about Fibonacci already on this. It's just kind of chilling out, nothing really going on. BlackRock, it's started to drop significantly. Just within this week, it went down about, where is it? Right here. It closed the week off at a 10% drop. Berkey has been tanking as well. Now, as we saw, the US 30, which is the Dow Jones, basically. Oh, pardon me. Yeah, we're going to be hitting a similar area, like Berkshire Hathaway and Dow Jones are almost interchangeable. They move at the same rate. Caterpillar, Carnival Cruise Line. So Carnival's very interesting because as the market is dropping, Carnival's just chilling out. It's not really going lower. We had an EMA shift last week, end of last week, on the daily. So that's a pretty good sign. Although we've had it before and then it just went back down. Okay, so as good a sign as that is, current resistance level is sitting right, I would say, where the candle body closed. Right, so we had that spike on Thursday, and then it just kind of dropped off, and had a weird day to yesterday. So the only time I'm going to be looking to buy Carnival when it finally breaks through here and does a pullback. On that pullback, it'll be a solid time to purchase it. ConocoPhillips also climbing. Target is going to be 136. Yeah, I mean, oil's a little bit rough right now. We'll jump in on that one on the other video. But oil's been kind of all over the place, right? The ConocoPhillips and Occidental are really having a time. Where's Oxy? Here we go. All right, so as you can see, Occidental has been losing steam, and it's actually had an EMA shift just over a week ago. Not a great sign, but right now we're rejecting off that yellow fib channel. It's a strong possibility that this is going to drop a little lower, maybe to the high 50s, before finally breaking out. And if Fibonacci's are any indication, let's take a look. From low to high, where are we sitting at right now? 618. Okay, 618 fib channel, pink EMA. I mean, there's a lot of stuff happening in the same area. It's quite possible that this is going to break out early next week. Okay. Good example too would be the trend-based fib extension. So if we go high to the low to the next high, right? Possible bottom will be around here, similar to where this is. But if we're going the opposite direction where a possible high could be, low, high, low, you can see it just tapped that a few weeks ago before dropping off. So currently $76 was the high. It's been, how much has it grown from that high? It was about 4.5%. And I think overall it's making good progress. Even if we draw the ray, go in there, you can see that's more or less a diagonal resistance or support and diagonal resistance right there. Okay, so yeah, who's to say? It could potentially come back down to that area before rejecting, going higher. So maybe 59, 58 will be the lowest before it does a reversal. Progeny is like, it had its spike at earnings, and now it's just kind of mopey, sitting around here for a little bit. Let's see how deep that was. We'll take a fib right at starting at that lowest point. We're tracing to the high here. You can see it kind of just went around that 50% in the golden zone and went right back up, but it didn't make a new high, so it is not really that relevant. Right, so let's see, SPY index. Where are we at here? Very similar to NASDAQ. This is honestly, it's just cookie cutter stuff. Spy, MES, all these guys, they look the exact same, right? So there's really not much to jump in on. But as you can see, where I drew that original entry, would have been a perfect snipe right there. Worked out nicely. Netflix has been surprising, actually. While everything's dropping, Netflix is gaining. So, yeah, maybe it'll just keep the excitement going until October when they announce either the cheaper Netflix with ads added to it, or maybe, who knows what that'll actually entail. But overall, I do expect this to kind of pull back up to 333 just to close this gigantic gap. I'm not saying that's going to happen anytime soon, but it will get back up there eventually. So good time to purchase would be if it drops below 200, which it will. It's just a matter of time. It is much more resilient than a lot of the other stocks. NVIDIA was the other surprise of Friday. It will keep going down. This one is kind of no question. There's significant losses when it comes to the Bitcoin stage, and people aren't really going to be mining as much or buying equipment because Bitcoin is losing value really hard. So, yeah. Overall, I would say not a good time to enter in any position. I'm gonna stay out. whatever long positions I have in oil right now, I'll hang on to. But jumping in on any stocks at this point in the game, it's not a good idea. I'll be looking to grab some maybe mid to late October. Depends on when the Nasdaq bottoms. I'm expecting sometime. Where was it? Yeah, around there, even January. But the first bottom before I'd be able to snag something in the short term, maybe for a few weeks. Maybe end of September, beginning of October, when that first bottom gets hit, then a retracement, and then the ultimate drop to the next bottom. Okay, it's going to be similar to what happened from the actual top. Okay, it's going to be some stagnation, a drop, a little bit of a pullback for a week, and then drop. Right? If we take a look at the weekly time frame, you can see 1 week down, another week nothing, another week down, and then a whole lot of nothing going on, and then finally, after it broke through like a very long consolidation, it was 7 straight weeks of Nasdaq slowly bleeding. Okay, and then from that point on, from this high to the bottom to the next high, the perfect 618, and then it dropped hard. All right, you can see how valid that is. That's going to be the exact same thing when we bottom out the next time. And just to actually give you an idea, okay, if I draw it out as a trend-based extension, this is what I can see happening. Okay, here's the high, the low, the pullback, right there. Okay, so this gives you a good idea as to where that potential final drop is going to go to before we get out of this and go higher. One thing I'm going to do actually is compare. I'm going to get rid of this. Sorry, I don't want my messy chart. Okay, one thing I'm going to do is compare Dow Jones. Where are we? Dow Jones. Here we go. Yeah, so that's happened exactly, but that's not the point. So let's go weekly. And where we're sitting at right now compared to 2007, this market correction here. All right, so we had a drop from the peak of 54%. Okay, currently we have a drop of, well, it kind of went at 19%. So 54%, if you can imagine, if it's going to be anything similar to what we had during the 2008 recession. We'll be testing COVID lows on the Dow. I don't believe it's going to get that far. This is an artificial recession, and the reason I say artificial is because it was cause and effect from COVID, right? So we already had that sharp spike down, but it recovered very quickly by comparison. Okay. What I can see happening is it actually testing that aqua. So from Dow, I would say dropping another 3,000 points at the very least to test that area. Rejection and a slight move upwards before any significant pullbacks. But once we hit the bottom, it's going to be the slow climb like this, as you see. Okay, so it kind of fell sharply from the peak to the actual bottom. It lasted 518 days, so a year and a half, a little over a year and a half. And currently we are sitting at, from the high to our current position, 259 days. So if we go 518 like the other one, we're looking middle of June before we finally hit rock bottom, if it's any comparison to our previous recession. All right, before that, what was it? Since the Great Depression, I think there's only been a total of, what, 4 or 5 recessions, period. Like, that's including the Great Depression. So, you know, significant 2000. This is the dot-com bubble burst. This was pretty bad. Okay, and then recovery, and then another drop. So dot-com bubble didn't really affect Dow a whole lot. This just kind of went sideways for a long time. It dropped, you know, from the peak to the bottom, 1,000 days. So I mean, that's 3 years, down 38%, and then it took 2,300 days. So, geez, how long is that? Over 6 years to recover, to at least get back to its previous high. I believe that's what we could be seeing, a possible 6-year hike that would kind of fall in line with any other plans going on. Yeah, guys, I'm just speculating at this point, thinking out loud. There's really not much else to get into. Everything is kind of falling into place as it's supposed to. Okay, just want to let you know to expect some pretty steep drops in the upcoming months. Okay, if you're playing the long game and investing, I personally am staying out of any long-term investments until we've bottomed, possibly in January, maybe a little longer. I mean, U.S. midterms are going to be a big catalyst for any sort of movement. And actually, there is one more thing. If we add, I'm just going to go on this chart. If we add bond, let's go U.S. bond. United States 10-year government bonds. Great. Okay. So we'll jump on this one. And as you see, as we are dropping on the NASDAQ and on the Dow, the bonds are recovering pretty well. They bottomed out in 2020. And now, but look at this. It's just been bonkers since the 80s. All the way at 15% originally. So, I mean, that's where interest rates were sitting at. Good example, right? And then dropping. Now interest rates from their artificial lows have gone back up to kind of reasonable levels where they were at. And this is going to knock out a lot of people from the housing market, unfortunately. Okay, so you can see back in 2007, it was at 5%. And then it's sharply started to drop as, you know what, I'm going to compare Dow Jones with it, okay? I hate when this goes back to normal. Let's jump in here with DJ. Where are you? There we go. Okay, let's just make sure it's on the same time frame. This one needs to be on the weekly. And let's match up the years. Okay, match, match, match. This needs to be expanded a little bit. Almost. Maybe zoom in. Okay, pretty close. I mean, I'm not going to get it perfect, I suppose, but maybe it'd be nice if I did. All right, well, whatever. You get the idea. So, bonds and the Dow. Okay, the only time that they kind of aligned was right here at COVID. Everything bottomed out. So stocks bottomed out, bonds bottomed out, everything. Okay, let's go back right here. Okay, and I'll just shrink this up a little bit more, lift. Okay, so you can see bonds and the Dow Jones kind of moving at the same rate of pace, but as the Dow starts to climb in 2010, bonds start to drop, right? And then they start rising back in 2013. Not sure what the significance of that is because it rose from 1.7 to 2.9, so 1.2% within the span of a few months. Okay? And that didn't really affect the Dow, as you can see. So if we move further along, back to the areas here. Okay, what's happening right now? Our bonds are going up and stocks have arched down. Okay, so what I believe is happening is the DXY, which is the dollar index. Okay, I'm just going to pop that on here. I guess I don't have it on my watch list. I should have. DXY, US dollar. Okay, here we go. Okay, so bonds and the US dollar have been kind of following a similar arc. Dollar kind of spiked at COVID. It made its lows back in 2021, and now it's starting to climb again. So these two kind of points very similar in bonds and the dollar value. But, you know, as far as the significance of it all, the value of the bond is very similar to what the current interest rates are. So as the interest rates keep rising, that's the entire value of the bonds itself, right? So when interest rates were almost bottomed out at 0, so 0.328, that's kind of the value of what they were at. And then finally sitting at around the 0.6 range. Once interest rates started to climb earlier this year, you know, it went from 1.4, 1.8, and then 3. Right, what are we sitting at now? 2.8 as far as an interest rate in the US. I can't exactly remember off the top of my head. In Canada, we are 3.25. All right. So yeah, as interest rates rise, so does the value of the bonds. When they go down, they start to drop, right? Because more people want to get out of the bonds from safety, and they want to jump back in on stocks for that greater long-term gain. Anyway, guys, this was a little bit long-winded. I didn't really plan on jumping into this. Hopefully, this video was helpful for you. And again, maybe just the first 10-15 minutes showing what is going to be happening on NASDAQ. It's really all that most people want to see. The rest of it was just me thinking out loud, so I apologize for that, but hopefully it was informative. Okay, guys, I'll see you next time.